Welcome back. You got Will and Ivan here from the Block Runner, and today we're going to be talking about a different kind of ICM.
Yeah, remember the OG one?
Yeah, the Internet Capital Markets.
Which was what? Believe,
BackZap.
Yeah, I guess anything that was kind of orchestrating a serious attempt around token launching, right? That's what you would kind of basket or categorize the ICM1 experiment to be.
Mm-hmm.
It's like, can we use these token rails to fund legitimate startups, basically?
Yeah.
And that
it's still brewing.
It's still brewing. Yeah, there's legitimacy behind that claim for sure. I mean, bootstrapping liquidity on chain can be utilized for more than just meme speculation, for sure. We think so.
Yeah.
And I think others do as well. So expect more of that. But there's a new ICM in town, like you're saying.
That's right. It's called Inference Capital Market.
Right. So be careful not to confuse the two. We'll try our best as well, but
so this is more on the AI side, not creator side.
Yeah, both are equally important, but this is starting to fester and brew to a degree where it's, becoming unignorable, I guess.
Yeah.
Just because it makes a lot of sense, and there's, a lot of up and to the right movement, which is typically what you want to see.
Yeah. Right? Yeah. That's when you pay attention.
Yeah.
All right. So we have Inference Capital Markets. So thank you, Kevin Simback, for putting this together. It's the most interesting category in crypto right now. We have Ask Venice, which is Venice. Mm-hmm. Kicked it off as the category leader, but there's new cohorts of projects all with live tokens. So we have DFIN AI is emerging with a unique AI lab, plus a decentralized inference approach. We have OpenServe AI, can dramatically cut inference costs with its serve reasoning model. We have Shoots, which is part of the BitTensor network.
Yeah, we talked a lot about Shoots in the past.
Yeah, privacy-focused inference provider. We have UsePod. So Chris Gilbert offers incredible discounts on inference by tapping unused capacity. So we had the pleasure of talking to Chris this morning.
Yeah. So we're going to dive deeper into this realm. So it's like a multifaceted realm of this whole, how is Web3 offering itself in the inference race, right?
Yeah.
Because there's got to be some sort of differentiator there, and they exist. But yeah, the specific avenue we're going to explore in this video is the unused capacity of inference, and how can that be commoditized and traded, speculated on, whatever.
Yeah, so finally we have Ask Surplus, also offers compelling pricing by aggregating excess supply. And then finally, Morpheus AI has been around longer and offers inexpensive models hosted via decentralized network of providers, starting to see traction. So what other projects are missing here?
It's a good question, Kevin.
Yeah.
So, I mean, we want to know too. So if you guys in the comments have some alpha.
Yeah.
Remember, we found BitTensor because of somebody in the comments.
That's right, yeah. Yeah, we found it when it was what was it, 30, 50 million market cap?
It was small. It was definitely it's right around where NAT is today.
Yeah.
Hilariously, right? There are a lot of parallels between NAT's growth and BitTensor. So do with that NFA, right? That's not financial advice. Just recognize patterns, fellas. It's very important in life.
It's that simple, right?
Yeah, pattern recognition.
That's right.
Yeah.
All right, so we got a tweet here by Eric Voorhees. This is very cool to see the secondary markets for compute forming. These prices are provided by DM holders who aren't using all their capacity. So this is referencing ANTS, which we're going to be talking about in a second.
Yeah, so this is the coolness that, if you know who Voorhees is, that's the Venice founder, OG Bitcoiner, whatever. Kind of like the king right now in this whole space. But this is what we're looking at. Literally a new resource entering into the on-chain market, right? It's not just capital flow, right? In the sense, you can have stable coins that represent actual capital that's now on-chain.
Yeah.
It's literally bringing real-world value on-chain. That's what stable coins represent.
Yeah.
And then you could generate new forms of capital with cryptocurrency, right?
Real-world assets.
Yeah. Other things migrating on-chain. But this is literally intelligence in the form of a commodity that's now being, now has exposure to these rails. So therefore, explosive things can happen from that.
It reminds me a little bit of carbon credits. So if you do well, you get these carbon credits that you can exchange for money.
If you do what?
If you
as a company, right?
As a company, yeah, you set up a bunch of solar panels, you get a bunch of carbon credits that you can convert into capital. Yeah, so it's very similar.
Yeah.
So who's the big guy in the room? It's OpenRouter. They just raised $113 million at Series B.
Right. So typically anything in Web3 to like truly fester and grow, it needs like its big bad wolf counterparts, I guess. I don't necessarily know OpenRouter is a big bad wolf, but it's definitely, centralized version of what's being conjured up here.
Yeah.
But the big bad wolf, I guess, could be like these frontier model providers, right? Like OpenAI.
Yeah, if you listen to the All In podcast, they spend, I don't know, almost an hour talking about the fact that everybody using OpenAI or Anthropic, they're basically hoarding all the information, collecting all the information from everybody using their services, and OpenAI and Anthropic are directly competing with the data that they're gathering.
Competing and how?
Competing by creating products, applications.
Yeah, so they've created incentive programs, or I guess NVIDIA's about to do that.
OpenAI too.
Okay, so this is like becoming standardized of an incentive program where it's like, use our inference for free, probably.
Yep.
And in exchange, share your ultimate revenue with us.
Yeah.
But it's a scheme for them to like, okay, now we got all these people iterating using our models, and once somebody generates traction, it's like that belongs to us now. Like we could just send our agent fleet to replicate whatever is working.
Exactly.
Yeah, it's very fucked.
Yep.
I don't know if that's just like capitalism at its finest or its worst. It's just it is what it is. Or
there's nothing you can do about it until regulation comes in. And, tries to figure out a way where this data isn't so easily like.
Yeah, because if you let this play out long enough, right, that means these companies just become like forces of like, I don't even know.
Yeah, it's if everyone has access to the same kind of knowledge base, you would expect people to compete with each other, but it's different when OpenAI and Anthropic, they see everybody, what everybody is doing.
Right.
And so if anybody gets traction, they'll just come in and start competing, and they're much bigger. Yeah, they're much bigger than you are, so.
Yeah, so there's been previous laws that have like formed around these kinds of like concepts in the economy, right?
It's
like
called monopolies.
Right.
Yeah.
You got to break at some point. You got to break apart these types of things. So, but in the meantime, there's quite an effort to counter that with like decentralized AI or open source models, stuff like that, right?
Yeah. So one that we're highlighting here is UsePod. So this is Chris's project. And this is the secure intelligence layer for the agentic web. So we'll put all the links in the description. That way you guys can check this out.
Yeah. So, but just to sum it up, it's basically so a lot of this started with Venice and their ability to lock up the Venice token to generate DM tokens. Yeah. That's 2 actually live traded tokens, right?
Yeah.
But this DM token has like this added use case that it can be redeemed for inference spend, and it's like it has like a daily allowance associated to it. So, what happens if you own these tokens and you don't necessarily have a use for? I'm not building anything, but I'm still earning these, and then they just fizzle out if they don't get used. So
correct.
How about I try to resell them, right? So that's what Chris did, and then he figured out like, hey, there's actual demand for these things. Maybe I should platformatize this.
Mm-hmm.
That's what he did. That's what UsePod is. It's a place where people could just come in to list their excess inference and compete, I guess, with one another, right? And that kind of like establishes a
market price.
What's the opposite of a premium? A discount, right?
Yeah, a discount. Yeah,
a discounted price for the same computational value.
Yep,
right?
yep.
That's the premise here.
So here's Chris. Claw Pump switched from OpenRouter to UsePod, then chewed through 1.49 billion tokens. But the best part is what they paid, $79, less than 6 cents per million tokens in or out. It's hard to platform 6,000 agents, but it's easier when you've got the best in-class pricing.
Yeah, so this is kind of like a representation of like why this matters, I guess, for not just for consumers of this stuff, right?
Yeah.
Why does it matter that people are now able to sell their excess credit? Well, people can utilize that and save themselves a lot of money. I guess for agents, that's kind of important, right?
Mm-hmm. Yeah.
Literally, like, if you run out of...
Yeah, they die.
You die off, dude.
Yeah.
So that if there's anybody out there in the agent space, that would be a good little marketing add-on. It's like a not like a kill counter, but like a death preservation counter, maybe. It's like this many agents' lives were saved because of the cost savings, right? Yeah,
so here's another tweet by Chris. This is announcing double daily credits on Level 5 Cloud. Level 5 was built on a stubborn idea your AI agent should pay its own way. It earns, it funds itself on chain, it runs. No credit card, no human babysitting. Squire is how the community plugs into that. And today I want to say that I want to say thank you in the only way that counts, which is more. Starting now, I've doubled the daily credits for Squire depositors. 1 million Squire now earns $4 a day in inference credits, up from $2 every single day. This credit is extended to every user that has deposited in the past as well as the future depositors.
Interesting. So this is where the, I guess, confusion with us kind of like stem from, right? It's like, okay, because per our own experience, right? It's like you can't just take the keys from a subscription and then bring it to the market, right?
You can't, no.
So then how is any excess, credits being
it seems
injected here?
It seems that there's our service providers, like we're going to talk about Morpheus, that offer you credits that can then be converted into these tokens that are tradable. Mm-hmm. And so, and then obviously, if you are providing like the hardware infrastructure for a lot of these computes, then you are running these open source models on your computers, and you might not have any demand. And so you offer demand in the form of these tokens. And so now you can start pricing these things.
Yeah. Yeah. So really it's like the unit here that's like being actively traded on these markets are these like credit rewards. And so there's multiple distributors of these things. You got, Venice, obviously. Now Squire is doing something similar. And another project we covered in the past called Compute, the Zero token.
Yeah.
They have a similar staking and like credit unlock mechanism, right? So all that's doing is broadening the pool on the supply side.
Yeah,
right?
Yeah. So here's the Squire token. It's sitting around 4 million market cap, and I think it was a pump fund token. Yeah, here it is.
Most tokens on Solana are pump fund tokens, right?
That's right. Yeah.
That is what's interesting about Solana. But there's base.
There's base, super intelligence, or surplus intelligence, I should say. Surplus spot inference marketplace is already helping users save $15,000 per week, nearly $800,000 per year at the current price.
Current pace. So yeah, it's like
current pace. Yeah.
That may not sound like much, right? 800,000 a year, but
yeah,
you got to recognize positioning, right? It's like 800,000 today. This is a largely unknown sector, right?
Yeah.
So extrapolate like what happens when awareness and like usage kind of blows up around this whole concept.
Yeah. It could go 800,000 today and then 800 million,
right?
A year from
now. And like this is starting to look very attractive, like kind of like DeFi, right? Where it's like big TVL numbers kind of is what attracted us to DeFi, right?
That's
Remember?
right. Yeah.
The first time we saw $1 billion lockup in some protocol, that was like a signal to us.
That's right. Yeah.
Holy shit, dude, we need to pay attention.
So here's superintelligence.ai, the website, open market for mortals, and it says your API calls routed to the cheapest offer. Your surplus capacity sold to the highest bidder.
Right. So very similar to UsePod.
Yeah, except this was on base. So they offer, here are the different LLMs. So you're not losing anything. GPT 5.5 is OpenAI's flagship model, and it says here the discount is 99%. So you're not actually going to lose anything or any intelligence, I should say. Opus 4.7 is here. Here's Opus 4.8, 46% cheaper. That's pretty good.
That's what we use mostly, right?
Yeah.
It's what most of Earth uses mostly. I guess maybe not now that Fables.
Well, it's between 4.8 and Codex 5.5 or GPT 5.5. But yeah, that's mostly the flagship models.
Well, that's crazy that one of them is basically offering you freemium services.
Oh yeah, here's Claude Fable 5, 53% off.
Yeah, that's awesome. So you're telling me like over time, once people discover like that this is an option,
oh yeah,
it's not going to be like widely taken advantage of?
Absolutely, it will.
Yeah, so I think you're kind of like, if you're a builder, this is great news.
Yeah.
Right? It's great news to us because we're like actively trying to figure out how to integrate ourselves.
Correct.
Because we have a slew of AI products in the works that require regular inference requests.
Yes.
Right? And at the moment, it's like, all right, we got to pay going market rates from these providers. Or maybe not. Maybe we could tap into systems like this and like make things way more efficient.
Yeah. Surplus. Right? Yeah. So here's a token. It's sitting at 4 million. Right. And this is where did this token launch from? Oh, this is base. Okay. So
It probably launched from BankerBot, like most things on Base.
Yeah.
So it's like you got Pump on Solana. It's typically BankerBot on Base, but maybe it's something else.
Okay, so let's move on here. We got ANTS. So this is a project that we were referencing earlier. It says the open market for AI inference. It says anyone can sell intelligence. Anyone can buy it, request travel, peer-to-peer, payments settled on chain in USDC, and reputation is verifiable. No gatekeepers, no accounts, and no one in the middle.
Yeah, it's another similar product. This one's on Base, right?
Yeah, this is on Base.
Yeah, but the differentiator here is there's an actual token incentive, I guess, in the works. So it's like,
yeah, which is here.
Yeah, there it is. Yeah,
it's a utility token for open AI coordination. So it says ANTS is intended as a utility and coordination token for the ant seed ecosystem. Holding ANTS does not represent equity, ownership, debt, profit share, revenue share, claims, or assets. It says ANTS distribution is meant for eligible users and providers to help the network grow. And here's the token supply. So only 5% float here.
Right.
And
so there's like a mining happening here, right?
Yeah. You're saying that this token isn't, it exists, but it's not actually being traded.
Yeah, I don't think so. I tried my best to find it, and it's not out there. So they're literally just distributing this, to bootstrap like a network, right? Like you would assume a lot of tokens to be utilized for, right?
Yeah, yeah.
On top of, the expected value of, selling your inference through these market rails, it's like actually getting a return.
Yeah.
Instead of it just fizzling away and, you're just losing, only losing.
That's profit margin going straight to the provider.
Right. Yeah. Like if you just happen to have these on hand, right? It's like those are your options. But this adds another layer. It's like not only am I getting something from these.
Yeah.
Basically mining a token. Now, what is the value of that token? Who knows?
Yeah, that's right. That's right. Here's a tweet by ANSI. It says state of the ant, which is kind of hard to see, but it says total active users. We have 728 buyers, 155 sellers,
wow,
about 1,000.
Okay.
And then we have network revenues, 103,000.
It's not bad.
Tokens consumed, 70 billion. Network fees, 4,000. And then ants available is 55 million.
That's like the actual. So there's probably, the supply is definitely 1 billion then.
Yeah.
Cool. So this is what I mean. So whether or not you buy into the premise that this is going to, AI is going to continue to proliferate and become.
Yeah. What a bet.
Yeah. I go along on that one.
Yeah.
For sure. But then it's another bet you got to make. It's like whether or not this, whatever you want to call it, cultural awareness of like, power, abuse of power coming from like, centralized AI.
Yep.
Whether that's actually going to strike a nerve with the zeitgeist at some point, and then can that be a catalyst to drive a lot of more usage in this realm? Then making bets around here is not a bad idea. As at least as a hedge, right?
Yeah, I totally agree.
Yeah.
All right, the final tweet here by Doc. It says Pod just printed 100 billion tokens in a single day. The number is the proof. Peer-to-pool and shared decentralized inference verification are not white paper words anymore. They are running in production at Venice tier throughput on a live decentralized GPU pool. It says the price that output at OpenRouter floor rates, which is a single model Qwen 3.6, it's roughly 27 million per year, which is 100% routed to pod buybacks before the basket, before the API is even live. And there's something interesting. Someone makes a comment here, says you should check this out. And then it's referencing a segment within the All In podcast that talks about how anyone who is using OpenAI and Anthropic are essentially divulging all the secrets to your project. So
yeah. So what was the broader conversation? That like they're definitely
they're just saying that the people who are spending all this money on these APIs for super intelligence, they are working on their secret sauce. But like disclosing that to what inevitably would be their competitors.
So are they like saying that's a bad thing?
Oh, yeah, they're saying that's a bad thing, and that there is a sort of like a scramble, sort of like an R&D effort to start using open source models.
I see. Yeah, so they're kind of like advocating for at some point this will become like a catalyst for like a transition away from this stuff to open source models, decentralized AI networks, all this stuff, right? So
yeah, especially if open source models start competing in terms of intelligence with these closed source models,
which they're getting close.
They're getting closer, yeah.
Yeah, and then a lot of those are being connected to these inference rails, so like it makes things dramatically cheaper.
Yeah.
And you're borderline around like the expectations of like output quality. So it's like,
yeah, if you're 10% worse than the frontier models, but it's an open source on your own tech stack, on your own hardware, like that is worth way more than, you know, the 10% intelligence you might otherwise get by disclosing exactly what you're doing.
Yeah, so this is interesting. So we're at some sort of crossroads, I guess, where I'm trying to draw parallels. It feels similar-ish to, like, you know, whenever we're developing in the Web3 space on Ethereum specifically, and like we quickly realize, like, holy shit, there's a scalability problem here.
Yep.
Right?
Yeah.
And it's like literally everything came to a grinding halt.
And then all of a sudden there's 200 L2s.
Right, but at the beginning there was like a few.
There was like two.
Yeah, and we were making videos about those few, right? And then they ended up exploding, like 1000x exploding.
Yep.
Because we recognize as developers and builders, like, we need this stuff to exist in order to do what it is we need to do.
Correct.
So we kind of got that frontier knowledge, I guess.
Yeah, front row seats.
Yeah, so this is kind of like playing out again in the sense, like, we know these AI models need to be cheaper in order for our user base to have access to like a sensible experience to produce quality stuff.
Yeah.
You know, so if there's like an infrastructure layer currently in place that's like on its way to provisioning that at scale in the same way L2s were back then, 5 years ago, it's like, you know, you really want to pay attention to that.
Yeah, absolutely.
Because some of these may actually be the 1000x winners, right?
Yeah, yeah, for sure.
Yeah.
Yeah, I mean, AI is not going to go away. If you can make AI cheaper, more people use it, and
more secure, private.
That's right. Yeah.
You're solving big problems here.
Yeah.
Right.
All right, guys, that's it for us. That's been Inference Capital Markets. And if you guys find anything interesting along the space of crypto and the intersection of AI, let us know in the comment section below. I appreciate you for watching, and we'll catch you in the next video.
Thanks.